Ashif?
I think rain is very key, and I think with agriculture taking 23% of our total GDP, I think there's one very critical aspect in terms of the struggles that people are having. But the second aspect that could relieve the economy is the whole bringing up the manufacturing sector. It is in a state of real, I would say, despair. If nothing, that's might be a strong word, but that's what it is.
But the agricultural, I mean, not the agricultural, manufacturing sector, it would be a relief if it was raised up. But this sort of, actually, we're just standing back because I'm told, oh, there he is. Yes, that's the shot of the Cabinet Secretary for the Treasury. He's actually standing in the middle of a sunny Nairobi, so the weather concerns perhaps are not as bad as you expected. That is a customary shot. We've been seeing it all through our history. The Cabinet Secretary for the Treasury used to be the Finance Minister holding up the big briefcase that has the budget speech in it. It's been a Commonwealth tradition since it started way, way back in the United Kingdom, flanked by Cabinet Secretary Mwangi Kiunjuri, PS Kamau Thuge, PS Torome, and all those gentlemen are the ones who are responsible for putting together this document. Obviously, devolution is a huge part of the government spending, and that's why Mwangi Kiunjuri, who's now taking this, is flanking him. But Dan Mwangi is over on location on Harambee Avenue, and you want to hand over to him. He's there with the minister, and we want to take him now.
All right, what you can see beyond the policeman who's on your screen is the Cabinet Secretary to the National Treasury alongside his Principal Secretary, that's Henry Rotich, alongside Kamau Thuge, with the usual ceremonial showcase of the briefcase where the budget statement is for the year 2017-2018, and they are now joined by some senior officials from the National Treasury. Just before they can, after this photo opportunity, they make their way to Parliament, where he's going to read the statement of the largest budget ever in Kenya at 2.62 trillion shillings, and Kenyans will be waiting to see how the government and how the Treasury, the people on your screen, intend on raising the amount of money that is expected to finance this budget. So we are having a few photo opportunities, and different delegations are coming to join the Cabinet Secretary and his PS. And just before these delegations came, we had the Cabinet Secretary for the Ministry of Devolution and Planning, Mwangi Kiunjuri, who's also part of this delegation, who has already gotten into his car to make his way to Parliament. And so we see the usual parading of the various officials from the different relevant ministries, and the Cabinet Secretary holding his briefcase, which is the coat of arms. A very ceremonial thing it is, and we see all of them donning the flowers. We know that then for them this means that it's a big day. The budget day is a big day for the National Treasury. And here, some of the noise you can hear around here is the journalists making sure they can get their own proper pictures. The Cabinet Secretary has actually accepted to come closer, as journalists have asked him to be able to get better shots of the briefcase, which contains the budget statement 2017-2018, as the delegations make their ways to their relevant vehicles so they can get on their way to Parliament, where we shall be having the statement being read. So the Cabinet Secretary is now heading to his car, where he's going to drive not too long a distance of about 100 or so meters, or just above, where he's going to read the largest budget, like I said, that Kenya has ever had, and so we wait to see what will happen as we continue with this coverage. We are also making our way to Parliament, where we shall be having the reading of the budget happen live on NTV, and we shall keep this picture going. We shall keep the information being shared as we go along, as the Cabinet Secretary makes his way to Parliament. And you can see he's been led by some police vehicles, by the police and various Cabinet Secretaries. As we can see, we have his car, which is on your screen right now. National Treasury Rotich heading in his flagged vehicle, followed by the Cabinet Secretary to the Ministry of Devolution and Planning, Mwangi Kiunjuri, and after that we have the PS the National Treasury, Kamau Thuge, who is in the entourage of this ceremonial day.
Dan Mangi, he's on Harambee Avenue right now, literally running, as you can see on your screen right now. It's only a couple of 100 meters between the Treasury, front of the Treasury, and the front of Parliament. But like we told you, the word from the Treasury had been because of the vagaries of weather, they were not too sure what the weather was going to be looking like around this hour. They opted to drive. And so you've got our team there, Dan Mwangi, led by Dan Mwangi, that is following them all the way to Parliament, and we'll then take the shots for you from inside Parliament, and the speech itself. We'll have all the highlights for you on screen. So just a few minutes more before we begin. But we were speaking here, Ashif, about what else could relieve the economy. And the point I was making with manufacturing is that you only get 50 or 100 jobs per big manufacturing plant that comes in. We don't yet have the scale of the Asian plants that take 100,000 people. That could be a very slow way of absorbing people in the workforce.
Yes and no, but I think there are some things like dumping of goods. There are some quick wins which the manufacturers have even put together that could revive this sector quite fast within the next 12 months. That's something that one can really look at. And the second area that we could again, it's a medium term, but it's to really quickly get some of these rules around the financial services sector and making Kenya the financial services hub. And again, there are too many gaps around that to really bring in all the players that we want in the market. And I think those two sectors, we seriously need to look at them, because they are, they can contribute to another 25-30% of this economy.
Jobs, though?
Also with jobs, yes. If you look at classic example of Mauritius today, with all the rules of the political and fiscal stability that Mauritius has, look at the amount of people that are just employed by one sector. Sugar is no more a critical part of their economy. And last point is also in agricultural, increasing productivity and bringing different varieties of seeds that would be prone to survive in with lesser rain, and that's another investment we need to make.
All right, and we're still following the team that is over at the Treasury. What you're seeing on the screen right now is they've arrived at Parliament buildings. Like we told you, it's a very short drive from the Treasury to Parliament buildings, obviously with no traffic this afternoon. The pictures will be a bit unstable because this is literally moving images. We have a cameraman with a camera on his shoulder moving around, Dan Mangi as well, who's leading the team from NTV that is covering that. So they've just arrived at the Parliament buildings. They'll obviously be ceremoniously welcomed, or ceremonially welcomed into Parliament to begin that speech. It's a simple statement, budget statement, that is presented to Parliament by the Cabinet Secretary, Henry Rotich. And so in the 1 or 2 minutes that we have left, Sachin, if you're to accept that the agricultural sector is important, what can the minister do in terms of quick wins, recognizing it's important, but also recognizing that the nature of agricultural sector is small scale? It's people who don't have too much capital, so they'll still tend to do things on a very tiny scale.
I think what you must encourage is an increase in input subsidies that will make seeds more accessible and affordable, and also looking at the taxes around the seeds so we can get better output, more accessible, agricultural related products. The second thing I would like to see him do, and this is because our customers or our clients usually talk about, is power. He must make sure that he's looking forward towards achieving long-term sustainable power.
But what does it have to do with agriculture? Because that would be good for agro-processing, but the farm itself, all you're looking at is a land and possibly tractors and things like that. Power doesn't necessarily get into that equation.
Yeah, I mean, I agree with you, but we have to look at the whole value chain. If you're going to have agricultural produce, but you don't have efficient power use of that agricultural produce, then you're stuck.
In terms of the other incentives, so you've spoken about manufacturing, you've spoken about agriculture. What are the other big labor sinks that there possibly are? Because I think that's where we're stuck. We're not only not generating enough jobs, you're also losing quite a number with all these companies that are laying off people.
I think those are the three critical sectors: agriculture, manufacturing, and service industries.
But service is fairly broad. I mean, you think of service, it's anything from being a bank teller to being a waiter to being
No,
90
I'm looking at financial services.
Okay.
Financial services is a key growth area, and the fact that today we have over 50 private equity venture capital funds were open base in Kenya shows that Kenya is, can be a serious player in this market, provided the right incentives are given to this sector. So I think definitely financial services is a critical area.
But I'm still drilling down, if you forgive me, Ashif, to the typical venture capital firm that I know about, or private equity firm, will employ, what, 10 people? So if you're speaking about, even if 1,000 of them come, they'll still not make too much
No,
of a dent.
it's the amount of investments that they make for expansion and other things. So when they are here, they make this bigger expansion, and a lot of them have earmarked money for agriculture,
Yes.
for manufacturing. The problem in Kenya today is that there is a bottleneck of good projects, okay, and the whole tax, the fiscal system make it longer in terms of due diligence and the cost of investing here. And if you were able to reduce that and deploy the money that they have in their armory, to real investments, you could have people really building the businesses up at a much faster rate. Okay.
Local investors, more than more than the private equity that's coming in from abroad. What about local investors? What sort of incentives would they be given in a speech such as this afternoon's?
I think looking at local investors, number one, we always said that there's this issue of money supply. I'm sorry to use these words, is that we don't want the banks to hold the government to ransom just because the interest rate, there's a cap. I think the banks have to be proactive, be able to allow investors to explore different opportunities and be able to increase our workforce.
There's some people who've said that the banking sector, being what it is and acting the way it has started to be bypassed by other ways of savings and investment. So you think about things like SACCOs, which are not within the Banking Act, and other such methods of collective saving and collective investment have started bypassing banks.
Yeah, and that's probably a good thing, because at the end of the day, we are having more money circulation from other avenues.
So would then the finance minister or the cabinet secretary for the treasury look and say, you know what, banks, you are holding the country to ransom, I'll use your words without an apology, and so therefore we'll incentivize everyone else apart from you? Would that lead to some sort of
No, I don't think. I
economy?
don't think that would be the case, because at the end of the day, the Banking Act, the amendment bill is still fairly young. We're still holding out and watching out what's going to happen. So I wouldn't.
But lots of people have. I mean, there was even some argument that banks are declaring their numbers, but these numbers only include 1 or so quarters of this, the effect of this Banking Act, and they've all thrown their hands up in the air, their hair is on fire, saying, "Look at what this has done to our numbers." So they're being maybe disingenuous about it.
I don't think so. That's that's the real truth, because I even said this earlier. I think the problem is that today banks, the 50% of treasury instruments are owned by banks. That's where the problem is. They've got a good return, risk-free return, without having to work hard. You collect deposits, you pay them the 5, 7, 10%. You go and get 12.5% interest free. That is where the problem is. The government needs to, reduce the competition, for treasury bills and treasury bonds. And if that money is released to the economy, it will make a significant difference.
But at the danger of repeating ourselves, Ashif, this can't happen because the government is pledging not to do anything about taxes. That sounds wrong, not to increase taxes. It needs money because it's an increased budget. You've been saying that it's 2.6 trillion shillings, the biggest budget you've ever seen. They need to borrow. If they're not going to borrow internationally because of all the issues with borrowing internationally, they are going to crowd out the private market.
Yeah, but the issue also is that if today a large corporate can be lent at 12.5%.
This is the EABL bond.
Yes. Okay, so a large corporate can. So why should the government borrow at 12.5%, 13.5%?
So whose fault is that?
I think it's a structural macroeconomic issue where we are not creating that long-term stability with our policies. Our policies keep on moving. If you have a stable long-term policy that is predictable, and economy is never 100% predictable, but if you can bring some predictability into our economy, reduce